What's going on, guys? Today I'm going to tell you how to save $5,000 if not more on your taxes if you're self-employed so that you can stick it to the IRS. With that being said, my name is Alex Tran. I'm a CPA here in the great state of Texas. Let's get tax planning. Let's say you're a self-employed individual and you make $100,000 a year and you're single. Let's break down the tax consequences. Just in income taxes alone, with the standard deduction taken into place, you're going to pay $15,247. On top of that, as most of you self-employed individuals know, there's another layer of tax. That's the self-employed income tax. That is 15.3%. So that brings our individual an additional $15.3 thousand in taxes. So in total, we're talking about $30,547 in taxes on $100,000 of income. So I'm gonna let you in on a little secret. With a little bit of tax planning, you can save $5,000, if not more. And I'm about to tell you how. So the secret is to create an S corporation. So I want to go back to the beginning of this video where I talked about a concept called self-employment tax. That's the killer. That's 15.3% of all income that comes into your personal tax return. So with an S corporation, you get to separate your income into two buckets. One is a dividend that comes in the form of Schedule K-1. The other are wages which are paid to you on a W-2, which I'm sure a lot of you guys are familiar with. One thing I want to note is that an S corporation is what's called a flow-through entity. So whether the income gets picked up on your W-2 or Schedule K-1, it flows to your personal tax return and the income is the same. So here's where it all comes together. If income appears on Schedule K-1, it's not subject to that self-employment tax. However, the W-2 income is still subject to the self-employment tax. So you might ask, why don't I just put all of my income on Schedule K-1 and leave it off the W-2? Well, there are rules around that. I'd recommend you talk to your CPA on how to allocate that properly. So now that we got the basics down, let's go back to our example. Just to recap, remember we have a single self-employed individual that made $100,000. Their tax bill of $30,547 was made up of income tax and self-employment tax. Let's now change that example. This person has made an S election, they're an S corporation, and they paid themselves $67,000 as a wage on Form W-2, and they paid themselves $33,000 as a dividend on Schedule K-1. So what does this all mean? Unfortunately, all income is still subject to income tax. So on $100,000, this individual still has to pay $15,247 in income tax. But here's where it gets exciting. Only the amount paid as wages on Form W-2 is subject to self-employment tax. So this individual's self-employment tax is $10,251. So in total, this person's tax bill is $25,498. So this person's total is $25,498. Compare that to our original balance of $30,247, and we get a savings of $5,049. Now that you got the basics down, you have the ammunition to go to your CPA and ask if they're doing everything they can to optimize taxes for you. If you have any questions, please leave comments down in the comment section, and I'd be happy to answer anything that you guys have for me. So everyone, I hope you enjoyed this video. My goal on this channel is to help small businesses just like you thrive and succeed. So if you don't mind, please like the video, leave questions in the comments, and I'll see you in the next one.